Good evening, friends. Welcome to my channel Smart Index Edge. I'm Nalinakshay Swami here. In my previous video, Smart Money Concept, I talked about the market structure, how to identify the pullbacks, what sort of pullbacks are valid, how to identify the valid pullbacks, and I talked about the impulsive move and corrective move. How corrective move you can anticipate for the corrective move. Those things, if you go to my previous video, you will come to know. Building on that smart money concept, we have to build a smart trading plan. So we need to do that. So first step in the smart money trading plan is to identify the market structure. Again, I'm talking about the market structure and direction. So smart money trading plans involves market structure and direction, and optimal zones, and order blocks, and liquidity concepts, and entry setup. We need to have all these things. First, market structure and direction, and you should have the optimal zones where the market can react and reverse back. Those are order blocks. And liquidity. Why liquidity concepts? I'll come to that. And entry set. Next, in the smart money trading plan, there are two major time frames, higher time frame and lower time frame. Higher time frame, 4 hour and 1 hour, and lower time frame will be 15 minutes and 5 minutes for the entry set. See, higher time frame, what we are going to see is the market structure. What is the market structure? Whether it is an uptrend or downtrend. So we are going to analyze the market structure, whether it is making a higher high, higher low, so that it is in an uptrend. And we are marking the latest higher low and the latest higher high to mark the key levels. And also we will see for the fair value gaps. Fair value gaps and liquidity zones. Where is the liquidity? We are going to identify the liquidity and also optimal trading zones from where the market can reverse from there. So lower time frame, lower time frame, yeah, I missed this. Lower time frame is for confirmation and entry. So step 1, we have to analyze the market structure. So there are 3 types of market structure in terms of direction. One is uptrend, another is downtrend, sideways or directionless market. Uptrend is characterized by the higher highs and higher lows, whereas downtrend is characterized by the lower highs and lower lows. So this is the very important step to analyze the market structure. In any type of analyzing the market, these are the basic steps actually. And sideways and directionless market. And we are going to analyze the key concepts of smart money. What are the key concepts of smart money is identifying the fair value gaps and also liquidity areas. I'll talk about that. Liquidity areas where equal highs and equal lows are made. So those are the liquidity areas, and also optimal trading zones in the higher time frame. Optimal trading zones means order blocks, buy order blocks or sell order blocks in the higher time frame to make a trading plan. Okay. Fair value gaps. What are the fair value gaps? Are they? It is in terms of 3 candlestick patterns. 3 candlestick patterns characterized by the significant gaps between the shadows of the first and the last candles. I'll show it to you. I'll draw it on the chart and I'll show it to you where there will be no overlap. These gaps are created when we have imbalance between the buyers and sellers. Why these gaps are important? When you notice this imbalance in the market, price tend to come back to that imbalance area to balance itself. So identifying the fair value gaps are also very important in the smart money trading plan. Next is liquidity or fuels for market. So that's what I talked about, equal high and equal low. And optimal zones are nothing but order blocks. So I'm going to show it to you on the chart. Let me go back to the chart of State Bank of India to explain it to you. See, I'm on the 4-hour chart to identify the market structure and direction of the market. As you see here, the direction of the market structure is bullish because it is consequently making higher highs. You can see higher highs I've already marked for your convenience, and higher lows and key levels. We are going to see, we are going to on the higher time frame. What I'm seeing is it is in very strong bullish uptrend. So in that area, I'm going to see latest higher high and latest higher low. See, this is the latest higher high and latest higher low, and the next higher high is the, and it is considered as the breakup structure. Why I'm seeing it as a breakup structure? Because I talked about the valid pullback. See, here, first when market made an high, it made a low. And later, it made an equal high. So you should remember this. This is liquidity zone. I'll talk about that equal high. And then this, this is a valid pullback. Why? Because it has broken the latest highest candle low and reversed, market reverse. So this is the area of the valid pullback. Let me bring it to valid here. After the valid pullback, market rallied and it took out of the low of this valid pullback, and it resulted in a corrective move, creating higher low, and market started moving higher. And when it started moving higher and made an high over here around 786, then break of structure happened. So here in this case, in this zone, there is a pause, but it is not a valid pullback. I've already explained why. Because this is a pause, it did not go below the low of the highest candle. So this is just a pause, and we will consider and we will ignore this pullback and consider it as an impulsive. Now also there is no valid pullback in this area, right? We have identified the latest key level swing high and swing low on the 4-hour chart. So after that, what we are going to do is, in the smart money concept, we are going to identify for the equal highs, fair value gaps. So fair value gap is a consecutive 3 candlestick pattern. See, here you are seeing 3 candlesticks. There is significant gap between there is no overlap of price between the second and the third candle. So you can see the imbalance over here. This imbalance is called fair value gap. Fair value gap. It can market come back to this imbalance area to seek liquidity, and it may continue in the original direction. As for us now, so it is my intention to show you fair value gap. This is called as the fair value. When here the market makes the equal highs. When you see, if I place cursor on this, 774.6 and 777, almost equal highs. When the market creates an equal high, and here also you can see equal lows. I'm placing cursor on this candle. It is showing 768.90 and almost 769. So these are equal lows. Equal lows and equal highs are the liquidity areas, liquidity zones. Why? Because liquidity is very, very important in the market. It is fuel to the market. Why? Big player has to come and exchange their shares. Then only liquidity will be gathered and it gathers momentum to the upside. There is possibility. So by identifying these liquidity zones, we can anticipate the market can come down to this area. There is possibility either to the imbalance area or to the equal lows. Then it becomes a valid pullback. If it comes here, you will be seeing valid pullback in this area, and market may continue to move higher to form a next higher high. Since it is in uptrend, though this is a swing low, and another higher low can be formed since we are identifying the liquidity zones. And around the key level, we are seeing the order block. This can also be an order block, this area. So already price has come and penetrated over here and it has taken liquidity. And usually order blocks are defined as identified as the last red candle where this candle has been trapped by the buyers. So this is an order block. This is a buy order block. This is buy order block. And if the market starts selling off from this area, we will identify as a sell order blocks as a key levels. So like this in smart money concept, we are going to identify the market structure to make a trade plan. We are going to see for the direction of the market, whether it is an uptrend or downtrend. What happens in a directionless market is, you will be seeing change of character repeatedly, repeated to the upside and also downside. So then you will come to know it is a directionless market. So change of character will be alternating with change of characters. So there is no direction. So direction after the change of character, market will not continue. It will come down. Again, to the downside, there will be change of character. Market will not go down. So there will not be any continuation of the trend to the downside, either to the upside. Market stays in a range. Then it is called as directionless market. So you understood about the imbalance, fair value gap, and you understood about the liquidity zones, why they are important. Liquidity zones are very important. They will act as a fuel for the market movement. And you understood about the pullbacks, valid pullbacks, impulsive move, corrective move, and in the smart money concept, these are all the set of things we are going to see for the market and take advantage of the market in advance. I am seeing in advance. I can anticipate these are the levels market can react from this level by seeing the imbalance, this fair value gap and equal lows because there is lot of liquidity beneath that. Even in the imbalance, there is liquidity as well as beneath the equal lows. So this is it, friends. The completion of the smart money concept by analyzing the total fair value gap. And later we are going to, there are so many things about premium areas and discount areas, even in the swings. So suppose if I measure the swing, if I'm not saying the swing has been completed, but here, let me measure the swing from the latest higher high to higher low. The price is staying above the, I'm applying the fifth tool to notice 0.5 area. So now the price is in the premium area. The price beneath the 0.5 is considered as the discount. So if the market comes to if it comes and tests this area, even you are seeing these equal lows and imbalances are in the discount area. So market seeks for the discount. When it comes to this area, it becomes a very good buying area. Now we have to see for the valid pullback. Valid pullback will happen only in this case when it goes beneath the equal lows and imbalance. Valid pullback. After the valid pullback, market may rally. There is possibility market may rally or it can take off, and then after this it may come down to make another corrective move. This process is like that, complicated. Another corrective move. It can do like this. It can take liquidity around the beneath the equal low. It can rally, and then it can move down to this imbalance fair value gap area, and then market may start moving higher. There is possibility. So in advance, what is the advantage of smart money concept is, in advance you can anticipate for the price come back to that area by knowing the liquidity area, fair value gaps and liquidity zones, and also understanding about the key level, understanding about the corrective move, valid pullbacks, and also it will help you to identify swing lows and swing highs. This is how you can make a smart money trading plan. Thank you very much, friends. If there is no clarity in explaining the things, you can always leave your comments in the comment section so that as much as possible I'll clarify it. Thank you very much. Nalnakshi Swami signing off.